Hi everyone, Donnie Schultz, Embrace Home Loans here with another episode of Homebuyer University. This week's topic, what is a float down and why is it important in this market? Any buyers right now, 2022, early May, have seen rates go up significantly since the beginning of the year. Higher interest rates mean higher monthly payments and affordability concerns. So if you're a buyer, you're going into contract, you are really in a position where you want to be locking in immediately. So the first thing is to make sure that your lender offers lock lengths that cover your contracts. Here in New York, it's particularly important. Contracts can be 90 days, they can be 120 days. You want to make sure that you have lock options at contract execution, because if you are forced into any kind of time frame where you have to float your interest rate, you're most likely going to be locking a higher rate than what you could have at the time contracts were signed. So really important to make sure that you have lock coverage. With rates moving higher and rates moving rapidly higher, there is going to come a point where we hit a ceiling and they potentially reverse. The question will be, when that ceiling is reached, do rates just kind of hover up at those higher levels, or do they start coming back down dramatically? If you look at 2018, we saw rates spike up, we saw them move up very quickly. Ceiling was hit and they dropped just as fast. If you were a locked buyer at that time, you really wanted to be working with a lender who not only was able to cover your initial lock, but also had a float down feature with their mortgages. So a float down is a policy that some lenders will offer that protects you in the case that you're locked and rates drop below the interest rate that you're locked in at. It will vary per product. It'll vary based on your qualifications, but ultimately, most banks want to see rates drop 0.25% from where you were initially locked, and that's going to start opening up options to lower your interest rate. There is most likely going to be a small cost associated with the float down. That could either be paid out of pocket or that could be wrapped into the interest rate, but you are going to be able to move your rate to market rates. So locking in, super important. As long as you're working with a lender like Embrace Home Loans that offers float down protection, there's really very little risk in locking your interest rate in. If you have any questions, you can reach out to me and my team anytime. Hope everybody has a great day. Talk to you soon.